The first 5 trading sessions of any year matter, but could 2025 be absolutely more wild than any other that we've seen before? Today we talk about how Wall Street may have set the trap and how our realization together on a channel about 2 weeks ago that we should not have been going with the head and shoulders pattern has played out so far. As you guys may have remembered, we've been discussing the idea that this was probably a trap set by Wall Street, and so far it's led into a short squeeze. So in today's video, we'll take a look at the island reversal that's just happened on the S&P 500, the biggest move in bonds that we've seen in a little while, and of course, the concern over a very important data stat, the highest delinquencies in a very important sector that we've seen since the global financial crisis. Let's discuss the good, the bad, and the ugly when it comes to stocks, commodities, and cryptos right now in these markets. Guys, this one is not to be missed. See you in a moment. Well, welcome back everybody to the daily show where we talk about markets together. If you haven't already subscribed, make sure to do so because we cover so many things here daily, especially if you love markets. Nvidia and AMD though, 2 stocks we've talked about in great detail over the last couple of weeks, have been going absolutely ballistic. And while dark pools showed us AMD only a few days ago, Nvidia has already started to see a massive surge before that. Why? Well, Wall Street were entering huge positions. More on that later on today's show as we discuss dark pools. But I want to begin today's session by talking about a topic that most people have probably gotten sick of. However, it's just hit a record milestone, and that is office delinquency rates. Not something we've worried too much here over the last 2 years on the channel, although we already knew it was starting to rise at a very heavy pace because it didn't really matter that much. Now it's starting to get a little bit more serious. A new all-time high, 11% delinquency rate, rising twice as fast as the financial crisis peaks, and at this point, $2 billion in loans delinquent each and every month. And that's probably going to get worse in 2025. Now, why I think this is important is not so much the office buildings, as still, as I've mentioned before, office commercial space is only a small piece of the puzzle in the overall world of debt out there in the US. However, I think that this brings up another very important stat, and that is that people consider all bad news now to be bullish. And when I say people, I mean us, the retail traders. Now, not to pick on anybody, but I did quickly go through some of the comments to this post, which I just put out this morning. Links in the description down below if you want to follow us over on X. And as you can see here, a few people are pretty bullish on these stats, and rightfully so when it comes to looking at previous information. We've got giga bullish, and in general, just people going bullish on anything that's bearish in terms of any stat. And what this tells us is that bad news is considered good news by all retail traders, and most people think that the Federal Reserve will come in and support any debt and do anything and fix everything, and it's all going to be great. Well, that's true most of the time, but as we've argued for a while, 2025 and 2026 may hit different when it comes to these markets, and we're looking for the signs of weakness. Now, do we have them here now? Are they right here? Are we going to have to say, my goodness, the big short is about to come? Well, probably not just yet, but certainly in the commercial space, we will have to continue to watch that space and watch some of the other big delinquency numbers coming through during 2025 because things are starting to weaken a little bit, even though everyone's getting more and more bullish. Remember, this is the period of time when 2/3 of the money has already been made in this current bull market on the S&P 500. What we're looking for now is what do we need to do in the last third? So let's talk about JP Morgan and some of the other big calls for the year ahead. Now, we already know that almost every single bank has put out their reports, and almost every single bank has gone between 6,500 and 7,200 by the end of the year. Everybody's bullish, okay? No one has got a bearish read on it. Usually they don't, but everybody's bullish across the board. Now, we're also seeing a couple of interesting things here from JP Morgan. 10 lessons from the past year. Cash is not king, bonds are king, they claim. For as long as retail investors continue to pour money into AI themes, the AI-led boom in stock markets is likely to continue. Now, we do agree with this. Remember, there is a difference between investing and trading. If you're somebody looking at the current fundamentals in a lot of these stocks, you're going to be scratching your head saying, what is going on right now? But certainly speaking, most pundits out there in the markets are very bullish. And of course, you have to detach yourself sometimes from the reality of what's fair in terms of fundamentals and instead pick up things and understand that flows, large transactions, and positioning is happening. And when you see it, you have edge in these markets. And of course, that's something that we've discussed at length in 2024 and has led to hopefully a lot of you doing quite well. I got some amazing reports from a lot of you guys over your year-end statistics. And let's just say some of you were up, a couple of 100%, which is pretty impressive. Most people, though, doing better than the S&P 500, which was very encouraging to see. So well done to a lot of you guys out there. And if you haven't done that, don't worry, there's always more opportunities. Remember, we come on this channel at the idea of abundance mindset. There's always another trade. If there's anything I've learned when you look at a lot of markets, is there's always another opportunity somewhere. Let's talk about the US economic kind of weekly reports. You can see here the Nomura report basically says that they believe that there could be even more numbers coming in for the jobs report. And this is something that, of course, a lot of people are speculating on. Will we have a strong jobs report, therefore get less rate cuts? What's that going to do to the dollar? Et cetera, et cetera, et cetera, et cetera, et cetera. And speaking of the dollar, it has now become the big discussion point. So this jobs number may matter because a lot of people are saying it's going to be even stronger. What if it's weaker? What if it comes in? And of course, we're not speculating on it at this stage, but it could break some key levels. So remember the jobs numbers as of Friday this week coming out 1 hour before the market opens, New York, 8:30 a.m. This could actually start a few interesting trends. Now, one of those trends is what people usually talk about when it comes to the US dollar. So we all know that the US dollar has usually trended up, especially post-election day. That's actually a pretty well-known seasonal. Now, a lot of people also have a seasonal factor that shows that January is positive for the dollar. And right now, the price action is certainly positive overall. But do remember, this is a Trump-led presidency. And he famously said here back in 2017, the dollar is too strong. And as of that point, literally started to tank the dollar across the board. Now, there were other things at play, but we do need to remember that this is actually the exact same trend from 2024 that we saw in 2016 to 17. So is this the end of the US dollar? It dropped significantly over the last 24 hours. Obviously, we saw huge pickups in the metal space off that and a few other things we'll talk about soon. But yeah, is the dollar too strong? Are we going to see it go back into a 2016-17 style ratio? We may know as soon as this Friday, so stay tuned for that. Now let's talk about markets. What are the good signs right now? Well, one of the interesting areas here is, of course, we just saw for the first time in a while, first time in 3 weeks, in fact, yes, more new highs than new lows. Now, did we hit a Zweig breadth thrust? No. So it's not that bullish. But did we see more new highs than lows? Yes, we did. And this is kind of telling us that maybe the market's starting to find its feet once again. But whenever this happens at all-time highs, we need to take it a little bit more skeptically. And the reason is because we really shouldn't have seen such bad breadth in the first place. So many stocks are trading in ranges now. And you could say, well, it's having a pause before the next big move up. And that's most likely there. But here are the stats in terms of when we don't see new highs and new lows for the first time in a while. Of course, in this case, 2 weeks is the data stat, but 3 weeks is what we end up seeing. What tends to happen 1 year later, 6 months later, 3 months later? And you'll notice it's less bullish overall than the normal data stats that we're used to bringing up in 2024. In fact, in 2024, I don't think we were finding stats that were bad. It was just bullish, 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 and it ended up being a pretty damn good year. For now, though, 2025 has started kind of weird. We got a Santa Claus rally that didn't come through. Now we're waiting for the first 5 days to see how that looks. We've got a 3-month toy indicator from Wayne Whaley that's looking a little bit dicey. Well, actually is broken already. So there's a lot of bad kind of seasonality signs that are already coming in for 2025. And this is why it's going to be one of the hardest years, but possibly one of the more profitable years for traders and investors that know what they're doing. It might be very tough, actually, for people that are just like, oh, I'm going to buy the dip and it's all great, guys. That might be a little bit different. So did this market sell off enough in the most recent sell? We've seen a good level being hit. We obviously saw a defended zone. We believe that dark pool liquidity gave us a massive edge there. So far, so good. Well done to you guys. And overall, we're seeing here, of course, the put-call ratio dropping down, which you'd usually suspect it would. Now, generally speaking, you kind of expect further put-call ratio drops. This has not been exactly the biggest wow we've sold off super hard, and that's what we expect. It was more of like a kind of flash sell, and then the market started to rally straight away off it. So this is, a little bit different to some of the others. One thing it was good at resetting, though, was retail sentiment. In fact, in the latest report, we saw more bears, we saw less bulls, and we saw a lot of neutrality. And what this is telling us, in fact, the actual latest one, I think, is only at 34%. This is the one before that. But this is really important. So we're looking at about 35% bearish, 30-ish% neutral in the most latest report, and around 34% on the bulls. So what this is telling us is that people are actually freaking out in markets, even though nothing much has happened. And a lot of that has to do with the breadth stats, which came out incredibly bad over the last 2 weeks. And a lot of people have been kind of dicing up their positions and cutting them. Should we be doing that though? Well, let's take a look at one of the biggest data stats. We brought this one up last year, turned out to be absolutely beautiful, and we're bringing it up again, which is the first 5 days. Now, Grant Hawkridge here has made this chart, and I like this one because the first 5 days tend to matter. Why is this? Well, if we have 5 overall percentage change positive for the first 5 trading days of any particular year, you'll notice that it brings some significant positivity with it. A very nice stat indeed. Now, if we don't get 5 days overall and you have negative years of data, take a look at this. Muted, terrible results. Does anyone really get excited about 2.62% on the year? Yeah, I don't either. So if we have a negative Santa Claus rally, we've already lost the toy in terms of the 3-month read. We've got more reads coming up in January. These are pretty bad starts to 2025 so far. We don't know that one yet, but we will update you when the 5 days is complete. Negative Santa Claus rallies by themselves, as we know, it's already a bad read, but it's not shocking yet. And as you can see here, negative Santa Claus reads, another one in 2024 coming in at negative 0.5%. Are we always going for a negative year? No, but we have had some of the nasty years after this particular point. So we've had some subdued years like 1%, 7%, 3%, that kind of thing. But we also have some good ones coming through. If we therefore get the 5 days down, we've got a negative Santa Claus rally, you can start to put things together. So what do we expect in a post-election year with Trump? Do we expect any different to this? Probably yes. There will be, I think, all ups and downs and everything. And I would probably not pay too much attention to these after-election cycle years. There's going to be a lot going on. And of course, whenever you see drastic change, and let's say we do get drastic change, the markets don't like anything they don't understand initially. So we probably are going to go into a volatile year. That is, the year will be up, down, and all around. More of this type of action and all sorts of spikes all the way through. So what do we usually see though? Well, we tend to see generally a bit of a January kind of pick up eventually. Feb and March can be sells. We know that March in particular is usually the worst month in terms of outflows during Republican first presidencies or the first cycles. And in this case, yes, it's the second, but I think a lot of people will look at it as the first. So yeah, in general, we're going into a period of potential instability. The next quarter is going to be very interesting indeed. Now, one of the reasons it could be interesting is take a look at the VIX seasonality. While the VIX stays generally subdued through the first kind of half plus of January, it tends to spike a lot around inauguration. So this is where a lot of people are going to expect the market to sell off. We're not confirming that yet. We don't certainly know it. But yes, VIX tends to spike around that time. And that's because, of course, people will also be anticipating, well, what's going to happen with tweets? What kind of drastic reforms going to go on? Are we going to see tariffs straight away, et cetera, et cetera, et cetera? All these concerns will come through. Another concern in markets, if you're an investor, has to do with concentration. I always find it interesting to look at these. This is 2000, 2020, and 2024. The only real consistency here has always been, of course, my favorite company generally in the markets, which has been Microsoft. And you can see here that we are at an incredibly concentrated market. Over 36% plus of the market is made up of just 10 companies. In general, if you actually look at the top 7 and 8, we're still looking at an incredible percentage across the board. Now, I mentioned before that Wayne Whaley's got some amazing data. One of his really good reads, again, we've used it for years here now, has been, of course, the 3-month change. And we failed it in December. So that is that we did not see the toy hat trick. Usually you want to see December, and then you want to see January, and you want to see February all posting positives. If you get positives in those 3 months, guess what? 27% 6 and 0 on the 12-month change. That is 100% statistic. That is a lot of reads for this market, and it's one that I love. Again, not a great sign for 2025. It's why we need to be paying attention to everything in these markets. It's not as easy as 2024 for sure. Let's move over now to the S&P 500 from, let's say, FundStrat Tom Lee's perspective. And you guessed it, yes, he's bullish for January. Whenever you have kind of those last few trading sessions, which we already respected and used this through other data, which was a negative end of the year as bad as we ended up getting, usually you get a very positive first week of the year. So far, so good. And we actually tend to get a positive January overall. You'll notice here that still Q1 can be a little bit shaky. So 80% of the time, we will be positive in the month of January with similar stats, just one read, and that is for a median 3.6% return. Another thing that people are going to start looking at, this one here is an interesting chart, which is to do with treasuries and the S&P. Now, generally speaking, the S&P has been able to go against treasuries for a period of time. If you actually took the exact same distance in time and you kind of worked out to where we are right now, you would say that in general, treasuries has been going down, the market has been going up for that period. That's okay. But then after that, all of a sudden, if treasuries kept going down, the market would have these dips in it, these further pullbacks. So we're looking to see now whether we actually get a pickup in treasuries. Now, what's that going to need? Going to need yields to come down. So more expectation of maybe a weakening economy in some ways and the Fed doing some cuts. Now, there's some other signs that are good for us as traders and investors in terms of potentially looking at gold and silver a little bit differently. According to Ray Micheletti, I think it is, he's saying that basically his main read here has turned from being bearish or more neutral in silver to actually going super bullish on it. Now, as you guys may remember, and we'll look at this on the charts very soon, you may remember that we had effectively a silver head and shoulders that broke below. Now, what's been the trend of a lot of these head and shoulders? Well, they've been reversing. We've seen it on NVIDIA, we're seeing it on Semiconductors versus the SPY, we're seeing it on many different reads. So this is going to be a very important one when it comes to leading into 2025. Have we just seen a massive turn in silver and sentiment shift? Well, if we have, similar periods to this when we saw these combinations. Basically, we saw combinations of silver relative to the dollar turning more bullish, where the dollar is turning bearish. Again, will Trump actually force the dollar down here? And when we've had gold, silver, and the dollar and euro relative sentiment all turning at the same time, well, the results speak for themselves. Some insane returns from gold and silver and miners over that time. This is one we'll keep updating you guys on as we get more information and we see those sentiment shifts. Now, let's move to Bitcoin before we go to dark pools. We all know this chart. I've brought it up millions of times. Post-election, we expect Bitcoin to do well. We already expected it in October. We also expect that maybe alt season should start soon. Bitcoin just had a massive 24 hours breaking through the 100K barrier once again. Obviously, we've seen Solana and ETH pick up, which has been great. And we are now in that kind of period that tends to be dominated more by alts. Let's take a look at the flows, though. We've got the latest data for flows here. So it was down for Bitcoin. Now it's back up. We've got some strong one-day inflows. Look at those one-day inflows. Very strong one-day inflows. Ethereum also coming in with an okay one-day inflow, kind of negating the 7-day outflow. So we had last week, remember, Ethereum was really strong. Bitcoin was kind of crappy. Now we've seen Bitcoin finding a lot of gains in terms of one-day inflow. That is big. That's a huge amount of inflow. So it's telling you that that's a serious break, and that break is happening with some volume, which is a good sign for Bitcoin traders. Now let's move over to the dark pools. First up, the defended zone. This is an older chart. We brought it up weeks ago, but as you guys can see here, there were tons of trades going through on those lows there for everything to do with the S&P. Now, we did just see one interesting trade. I'm not sure if it's a new buy or whether it's a sell, but one came in just at the close. And basically, this is a 2 times levered, biggest trade we've seen on the Qs, 2 times levered ETF. So a big one coming through there. Was it a TP? I don't know. But when we go back over and we look at Friday's results, because we're getting more information from those, we have the number one largest trade, dark pool, coming in right at the close. And of course, we know how that worked. That got a gap up, island reversal. Yeah, gap up, island reversal. Number one largest dark pool trade coming through the U Pro. We also got a massive trade coming through a bullish 3-time fund for the S&P. So guys, it looks like Wall Street's been a little bit busy over the last kind of week, getting in on some of those nice dips and obviously trapping many retail traders. We also saw companies like TSM finding a lot of strong prints. We saw in general semiconductors getting huge amount of base buys. We obviously had AMD with that little secret purchase down the lows, and all of these are breaking to the upside. So this kind of represents that people that are on the short end here might be in trouble. I mean, it's not guaranteed, nothing is, but they might be in trouble. We also had things like energy getting a lot of bases, and a stock that we looked at on our Monday live stream. And yes, we will be bringing back Monday live streams, totally free for you guys to join us. Make sure to do so a few hours before the market open every Monday. Well, we ended up seeing BP also breaking on the upside. So let's have a look at the flows. What happened over the last 24 hours? Semiconductors up, clean energy up. This has been the trend. These are the two market sectors that have really dictated the last month. Take a look at this. Clean energy up 9.21% on the month. Semiconductors up 5.27%, and weirdly enough, solar holding its own. Now, this was an absolute hated sector post, of course, the election. But we're basically seeing what is usually considered risk-on kind of market sectors doing well, and we do have some concerns with, of course, home builders. So we'll have to continue to watch the home builders over the next couple of months as we detail whether these are actually an early warning sign of something very bad happening underneath the hood. But in general, semiconductors, exactly where we've been positioning the last month. These guys, they show themselves. I'm telling you, every time they come through because they can't hide their massive positions. They have to build. And semis have been doing quite nicely. Let's move over to the S&P. We'll look at the options flow in a moment. First up, it's an island reversal. Obviously coming off this downward trend line, as you'll see on the Qs as well. Is it resistance? Yes. Did we see an okay gain out of the market? Sure, we did. We do also have the island reversal, which can be quite strong. Last time we saw that was over here and here. Obviously, both led into bullishness. An island reversal by itself, though, is not that great. It's not like, wow, I'm going to just go buy the market. But often if it does close bullish, like these two did, that is a better sign. This one, not so much. Closes kind of a doji. So what I'm still thinking is these lows should be safe for now. We'll look at the options right now together, but it's still a good sign that we managed to pick back up. These are the options high and low levels in terms of where we're seeing resistance. Again, could this be a double bottom, low bases, breaks through the top? That's going to be further momentum in the direction of trend. That's going to look really, really good for all of us if we can get there. And when you look at the S&P 500, you can see that we just closed in positive gamma territory once again. So we went from being negative, everyone's all horrible in the market. Suddenly we're looking at flows kind of picking back up. And we're obviously seeing that we also have here these pretty decent little put kind of supports that are happening in the low 5,900. So again, most people are kind of turning towards the bull side. 5,900 now remains the largest put level for the month. So it just doesn't seem like the market wants to go too bearish. It's possible, but the options flow for now is heavily skewed in price action kind of looking more towards the bull end. And if we do close above what today's high was on the S&P, that's going to be a really good sign that the bulls want to take an all-time high. Let's move over to Tesla. As we know, up, down, and all around in Tesla. The chances of going into the low 300s certainly is possible. We're probably done with that 500 high for now. And I'm thinking it's a 1 to 3 month kind of sideways down action. So what that means, we're going to spike and we're going to go down. We're going to spike and we're going to go down and sideways and everything. Yeah, Tesla's biggest trade, the most successful trade, the one that we all knew was going to happen as soon as we saw the post-election. That could be over for now. It's more in consolidation. Doesn't mean you have to like run away and be terrified, but it's certainly something we should be paying attention to. Let's move over now to NVIDIA. Wow, 149.43. Another day of squeeze, and it is still struggling with that 150 area. If we can get through 150, we know that is such a huge zone. And this thing could reprice itself into the 170s relatively quickly. So yeah, we've got some serious strikes here. The 150s, no joke though. We've seen it many times struggle here. Look at this. This is March, 150s everywhere. We've got here February, 150 is pretty strong, 160 is also pretty strong. And then, of course, we have the OPEX of January, 150, second most strike level other than 140. So we are in positive gamma. We are certainly seeing a squeeze. We have to assume a lot of people are caught offside here. The question is, where's the profit? So is Wall Street going to push it back down here a little bit, allow them to buy back up? So let's jump into the charts, and first up, start with the US 10-year. This is definitely one of the charts to watch this week. Most people are focused in on this 4.7 high, and rightfully so. If we see this getting broken up, that may put some pressure on markets. So certainly this is one of the more concerning factors. Most bulls kind of want to see this drop down a little bit to kind of allow that potential for a rate cut, blah, 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 to come through. From the bonds market perspective, though, one of our lead indicators has done what we'd usually expect with a low being formed, which is dropping off. You can see here the risk that was on the markets has dropped over the last kind of trading sessions. And this is something that we saw happen back in August and back in the September lows. So is this a good sign for the bulls? It certainly is, and it kind of backs up that island reversal claim. We've also seen high yield junk, which you can see here, junk bonds effectively breaking back up. And this again shows that that level of concern that was there starting to kind of dissipate in market. Again, it looks like we're seeing, at least for now, a little bit of bullishness. Now, a lot of people were mentioning this in our live streams when we were going through the open, which was the US dollar falling off a cliff. As we've already seen with the stats, yeah, we've tended to see with Trump presidencies anyway, a dollar falling at around this period of time. But that doesn't mean that we've got a downward trend yet. Some people are saying sentiment shifted towards the downside. I would say it's still holding the daily 20 moving average. And as we know, this level has mattered. We've got daily 20 moving average bullish, bullish holds, bullish hold for now. And of course, this is still a possibility. So watch the non-farm payrolls. If we ever dump below 105, kind of 70, that's going to matter. That's going to be a huge shift. And we've also got an alert here at about 107.30-ish. We'll just quickly get the price for you guys. Yeah, 107.20, 27. New low formed here. That could be significant. For now, though, the US dollar is still stronger than it is weaker. So just remember, yes, everybody's talking about weak dollar. This is what happens whenever you see even one day of sell, everyone jumps on it. We haven't seen a cascade effect or anything that's really shifted the market sentiment. Gold's holding its own. We are still bullish on gold, obviously looking for over $3,000 this year on that particular metal, which will be awesome when it is achieved. Let's hope it is achieved. And then we've got silver finding further really good quality structure. Now, a lot of people I've been talking to, some people that have quite a lot of expertise in the area, are really bullish silver. They are loving silver right now. More than I've ever seen them love silver in probably about a year, which is really interesting. Now, are they misguided? Are they correct? Well, interestingly, that is against one of the bigger trends, which has, of course, been the head and shoulders that everyone's talking about. Left shoulder, head, right shoulder. As we've recently shown you on NVIDIA, don't always trade these against trend kind of positions. I still think the 3115 is going to get that really strong kind of silver bull bug back in. And we know where most of the stops are going to be. There's going to be stops in here, here, and here from a squeeze perspective. So if you're looking towards a silver squeeze, you're looking for those levels to be broken. And so far, so good. US oil is holding its own for now. A lot of people now moving over to oil and saying, wow, this looks pretty good. Should we be in it? We obviously turned bullish in this candle here in December. And so far, it's been so good. Didn't quite hit 75, 75, 80 area. So I'd like to see it kind of continue on the way up. What about Tesla? A lot of people trying to buy the low here. I don't blame them. 380 is not bad. 330, 340 would be even better. And I kind of feel like this is still the possibility where we kind of go down eventually and then pick back up off this area. But now I would say, though, that it's in a 1 to 3 month hold. So what that means is we can rally between, we kind of stay between these levels most likely, and we kind of see some nice price action. I would say patience is the best key here. If you're bullish, you're probably looking at about 450, 460. If you're bearish, you're probably looking at this area, finding some bear positions. And then this is where I think the big, strong investors are going to be sitting. So will we get a 340? What do you guys think? Let us know in the comments down below. Semiconductors, boom. Look at that. Absolutely phenomenal. Great trading here, guys. People that showed commitment to the semiconductors trade. You're getting rewarded. It is a very nice position. I'd like to see an all-time high on semis moving forward. That'll be good for the market. And then, of course, there was NVIDIA. Fantastic. Totally opposite to what most people have been talking about. You guys smashed it out of the ballpark here. So well done. And a lot of people have been saying, look at that inverse head and shoulders now, Tom. Now, you guys know I'm not huge on the patterns like this to only make decisions. But we obviously did see RSI. I don't often bring it up, but RSI was showing some interesting stats down here. We went towards the bull end, and so far, so good. This 150 zone, this level has been a plague for NVIDIA. So if we can get through it, that's going to be another strong sign that maybe we've got further squeezing on. You can really see by the size of these candles that someone's being mutilated. Hopefully it is not you. AMD, nice kind of rally here. Still not through that 133-ish, 132.50 zone, but overall really good signs of recovery in AMD. It's oversold for sure. The question is it value on fundamentals? I don't really think so, but it doesn't really matter. Again, we saw large trades coming through. So AMD further improving over the last 24 hours. What about Chinese market? Still holding, but not moving in any particular direction. It looks like every time the PBOC say anything, the market's like, not enough. And as we've said, this is the game of cat and mouse. It's a longer form game, months and months and months, but you will get those initial spikes. And we still think it's looking okay. But I will go back to this, and we'll talk about this in our next one, which is the Chinese 10-year. Look at this. Oh, I'm researching this to actually see if it's worthwhile paying that much attention to. But as you guys can see, that is a horror show. So that's a horror show on the Chinese 10-wise. And yeah, we're searching to see whether we can actually gain any edge off it. That being said, we're not seeing the price action getting slaughtered in the stock markets. Let's move over to the US 2K. Very nice. Nice little new high here. Obviously couldn't hold it, which is a problem. So we can now mark out this previous day high. And similar to the S&P, if we can get above these, that is a very bullish sign. So I like that indeed. NASDAQ, same thing. Downward trend line, very similar to the S&P. It's why we often look at the S&P more so than the NASDAQ. And you'll see here it's just struggling with this initial kind of resistance. Again, things bullish on the bottom, the way you look at it. And at this stage, still looking okay. Maybe a little sell-off before it hopefully keeps rallying. But yeah, they're at res. Let's move over to the crypto market. Solana obviously solidifying, holding above this all-important 200 zone. Still looks pretty good on the charts. Maybe it does a little bit of consolidation. Ethereum also moving on the way up. Looks like a kind of dull market here in the smaller time frame charts. There's nothing wrong with that. That still looks pretty bullish and good. Want to get 4,100 plus on Ethereum to really get stuff started. And Bitcoin actually leading here the last 24 hours. Huge flows. Big flows, big break above 100K. Generally speaking, that doesn't look bearish. As that person said before, giga bullish, yeah? In this case, it's not bad. And you've got to kind of say that pullbacks look to be met by bull demand on that particular market. Let's move over to the FOMC meeting minutes. Guys, we've got that coming out Wednesday, Jan 8th. So this is going to be important, 2 p.m. And if we scroll down, we know the big one here, though, is the non-farm payrolls. Expected to be 154K jobs created. We know that most people are confused about which number this is going to be. We look at the revisions. We call it the fake market news when it comes to jobs because it's ridiculous, but it does matter to yields and it will make some difference there. So we're going to be watching the US dollar and the US 10-year quite a lot this week. If you enjoyed today's video, make sure to subscribe. Let's kick Wall Street's ass together in 2025. And obviously, if you're interested in finding out more about our courses, we've got a flash sale on for the new year. And check us out on X as well. We post a whole bunch of these charts there so you can have a look at them in a little bit more detail. Bye for now. Some things to worry about, but still, we're bullish on markets for now, guys. Catch ya.